Bring that ass back like a boom, 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 boom.
Now, I've said it many times. I think that crypto in general, Bitcoin and Ethereum as being the headliners, is actually holding up very, very well compared to the other market participant. And we've been saying that you can basically compare Bitcoin and Ethereum to Nasdaq, but Nasdaq's been going down. Bitcoin and Ethereum's been forming this really interesting flag right here. So you can see what I'm talking about. Definitely that's a move. For me, that's a positive move. It's building some base. Now, usually after a big decline and a consolidation to the upside, we are followed by another down movement. But what I'm looking at here and what volume is suggesting with this huge wick right here and this huge wick, take a look at the volume. So these are huge support zones, and on these drops, volume is not elevated. You had it right here and right here, so there's definitely some resistance around the 45,000 area. But look at this huge candle compared to this candle, compared to this candle. Look at the size of the candle and the volume corresponding. So something is off right here. This volume right here is not, this candle right here is suggesting a lot of action, very little volume. And right here with this candle and this candle, you see that there is some demand coming into the market at these lower levels around $39,000. Same thing with Ethereum. Ethereum. We've been talking about it the same way basically as Bitcoin. Let's just connect those two lows. And we have here a higher trend line forming, which is positive action in terms of price. So you see not even this can catch it, but we're definitely looking at the same pattern as with Bitcoin. Let me just zoom out a little bit so you can see it. Same thing as with Bitcoin, wider here, and the positive thing is that those those lows are starting to appear on a higher base here. And something I'm looking for is a test to the 360, 250, where we saw some resistance. Now this drop right here, unlike Bitcoin, you can see this drop right here was an elevated volume, and the volume that followed right here, right on the 50-day moving average support, volume coming in. You see another candle right here, and now it's up to see whether this drop right here from 310 to 3000 will happen on elevated volume or not. If we are able to hold the volume down, that means that definitely there's no more supply coming to the market, or at least it's depleted, and we will be ready for a move up to test the 200-day moving average and probably move above it. A good thing, again, as with Bitcoin, we saw these are zones of support, huge volume, not much headway for the bears, so that's support. Huge volume, not much headway for the bears, and that was tested twice. And as you can see right here with this volume, we're showing some bullishness. So what's interesting to see here, and you can learn a lot from just looking and observing at volume. Look at where this candle ended. Right here, this huge volume candle. These are the important candles. Candles on huge volume are important when you look at the chart. So this volume ended right here. Where are we stopping right now? Right here. You can say, yeah, it's the 50-day moving average. All right, if I remove the 50-day moving average, show study, no. You can see where we're stopping. Right here. Right here, if you look at this pattern as well, we had a gap over it. Next day, rejected, coming down. Even on lower volume, we're coming down. Rejected, coming down. Coming down, coming down, coming down. We're forming this low right here. Volume is coming up again. So that means support. Again, we're moving up. Volume is depleting. Moving down, coming to this trend line or these lows right here. Volume showing up. And again, volume is depleting right here. Coming down, and volume is showing right around here. So volume is very important when you're doing your analysis of stocks. Now let's just take a look at some of the internals. Starting again on TradeStation, put call ratio, very important. We have it right now at 0.8. As I said, if I see it around 1 put call ratio, that means that we are in a bearish zone or close to a bearish exhaustion. Right now, this is neutral. At least it was neutral before 2020, the COVID crash. We've talked about this a couple of times, but you can see it clearly right here. Before the COVID crash, let me just remove, okay, I don't have the snap mode on. Before the COVID crash, you can see it was oscillating between 0.75 and 1 being the upper part. After the COVID crash, it's oscillating between 0.75 and 0.5. Come on, draw. All right, doesn't want to draw. It doesn't matter really, but you can see it clearly right here on the chart. It's oscillating between 0.75, which is the upper bound right here, and 0.5. So elevated call volume, depleted put volume. This is normal. This is not. So right now we are moving back into normal territory. I think at least the market is stabilizing in terms of put call ratio. Market depth, I'm not going to talk about this too much. So let's take a look at the breadth. As you see, this is my complicated chart right here at the bottom. This green line, this is the S&P 500. This is stochastics slow indicator. I'm saying it's slower because sometimes I mess it up. And these are the stocks above their 10-day moving average, the white line, 20-day moving average, green line, 50-day moving average, the yellow line, and this purple line is the 200-day moving average. So basically what you see right here is all four moving averages are between the 28 and the 37%. So that means that 37%, 38% almost are above their 50-day moving average. Now, what you can see here in the past is that when the 10 and the 20, so we're looking at the yellow, or we're looking at the white and the green line, when those are below 20, or at least in the vicinity between 30 and 20, and stochastic is oversold below 20, we can see a bounce in the market. And I've clearly said it. You can see here the dotted lines. Right now, stochastic is oversold. However, the moving averages are not that down again. So there's two ways to interpret that information. The first one is, all right, the market is stronger than it looks. Most stocks are holding pretty well. Stochastics is oversold. We can go. The other one is, well, stochastics can continue to be oversold for a number of days, like it was right here. So you can see right here, at this point, that's 22nd of November last year, stochastic is oversold. Is starting to turn around. The market is still holding, but the number of stocks above their 10 and 20-day moving average is still not below 30 or 20. We needed that to move below in order to rally for the market. So we might actually be seeing that. We need a little bit more movement to the downside in terms of stocks before we can actually talk about some rally in the market. The other one I want to pay attention to is the stocks that are making 50-day, 52-week highs and 52-week lows. Unfortunately, the red means that more stocks are making 52-week lows than stocks are making 52 highs, although we are seeing some sort of a rise in this. But we're seeing an even steeper rise in the 52-week lows for stocks. So it's not looking good by any means so far. Let's look at the VIX. VIX it's in the middle, so it's basically neutral. It's not elevated, it's not really down too much, but these are the two, these are the Bollinger Bands on SPY and VIX. There is some divergence in terms that the S&P 500 is touching the lower Bollinger Band, whereas VIX is staying right in the middle. So I'm expecting some rise in the VIX for next week. And that will pretty much conclude the internals. Basically what they're saying in one sentence is mixed signals. So we might expect some minor pullback here, but also some signals are saying there's still downward movement ahead. The most important part I would conclude is that NASDAQ is the weakest of all indices, and Dow Jones is the strongest right now, with S&P 500, as I said, hanging around the 50-day moving average, and IWM not supporting what the internals are doing, so it's up to see whether it can hold or move a little bit higher. So that's in terms of the indices. Now let's go and take a look at the industry groups, which is strong, which are not, and then sentiment, and do the summary at the end. So as far as top industry groups go, we don't have much of a change. To be quite honest, I might as well just stop doing those tables and just give you that table pretty much every week on until something actually changes. You see energy and coal, oil and gas, chemicals, oil and gas, media periodicals. We've seen this pop up a couple of times and then drop out of the top 10. Then we go back to oil and gas, steel producers, oil and gas. So what a surprise. Now, one thing that I did this week, I thought it would be interesting for you to see how, and Bill O'Neill talks about this in length, how important a relative strength of the group is. Year to date change for energy and coal is 85%, and as you can see, all of these, the least amount change was oil and gas royalty trust, and that doesn't really sound like a high beta name for the companies, but if you think about it, if you're only trading top industry groups in terms of relative strength, these are some of the returns that you might be looking at. So it is quite an important thing to be in those high relative strength groups, and these are the type of stocks that we actually trade here. So it's a good thing to look at the relative strength of the group. Some of the groups that have moved the most from last year to this year in terms of relative strength. Now, these are not in the top 10, but as usual, these are groups that have made the largest moves from last year to this year, and this is in order of magnitude. So the highest jump was made by the transportation airline group, and these are some of the top stocks that I've highlighted here for you. You can take a look at those tickers, pause the video. These are all things that might be interesting to you. I've voted here the insurance diversified group GXN. We took a small position in it. So these are the top movers. Now let's look at the worst industry groups. And if you have been trading those, especially NASDAQ related, you'll see your portfolio is probably in the minus zone. As you can see, leisure products, household, leisure, retail, apparel, shoes, and then we have computer software, retail, mail, order, and direct. At the last place, pretty much firmly staying there. As you can see, industry group rank 6 months ago, this retail, mail, and order was at 187. So we've been pretty much close to the bottom. Something other to note, computer software for special enterprises has been, like 6 months ago, it was ranked number 9 in terms of relative strength, and then it dropped for 3 months. In 3 months, it dropped from 9 to 175, and it's been firmly in the bottom 10 of the groups. But anyway, year to date change, as you can see, it's all in the minus. So relative strength of the groups matters. And these are the top industry groups moving to the downside. So from last week to this week, we have auto manufacturers, Tesla, Ferrari, computer software design, energy, solar. I actually was waiting for SEDG to set up. It did not. Electronics and semiconductor, AMD, NVIDIA. AMD has been really poor. Telecom, fiber optics, Clearfield right here. Computer networking, ANET, Juniper Networks. We had a position here at GWW. We sold it down with retail and wholesale building products going down as well. So these are the top and the bottom industry groups. Again, I urge you to stop the video here in the movers to the downside or to the upside. Check out some of the tickers, see how things are moving, and you might find the next big winner somewhere in there. As far as sentiment goes, decided to make a compilation between the two charts. So I'm just going to show you this chart from now on. So basically, this is the difference between bulls and bears, and as you can see, we're deeply oversold right here, minus 32.6. Which is actually lower than it was in COVID crash 2020. As you can see right here, we were at minus 28.99, now we're minus 32. So we're going even farther down into the bearish territory. Break even is at 0, of course. As far as the fear and greed index from CNN, I want to talk about it just a little bit more this time because we didn't have the time to basically go over it into depth, but I think it's really important for you to understand how they compile this index, and you can definitely check out the website. So it's at 45 neutral this week. It was neutral last week, and a month ago it was at 34, which was the fear situation right here. And in terms of how it goes through the years in percentages, we are right around the 50, which is pretty much like the mid zone. So the fear and greed index is comprised of 7 elements. The first one is the market momentum, and CNN basically uses the S&P 500 and its 125-day moving average. Right now we are below it quite substantially in terms of length, and CNN has this on extreme fear. Now the second component is the stock price strength, which is the net new 52-week highs and lows on the NYSE. We have this at fear, which is a negative territory again. We're below zero. Then we have stock price breadth, which is the McClellan volume summation index, and we have this in greed. It's right around the zero right now. Then put and call options, the 5-day average of the put call ratio. We have this in fear, which is around 75. I still think this is about neutral, not really fearish. Position fear goes definitely around 1, but they have their own definitions of those indexes. Then they use the market volatility as their fifth element. Basically VIX and its 50-day moving average. Right now, the 50-day moving average of VIX is at 25.85, whereas VIX is at 22.70. So we have this on neutral. Safe haven demand. The difference in the 20-day stock and bond returns is an extreme greed right now. And junk bond demand, it's in fear. Basically, this is the yield spread between the junk bonds and the investment grade. So this is how you come up with the overall fear and greed index, which right now is at neutral, as we saw. Last but not least, the fear and greed index of crypto. Look into bitcoin.com. They have their own methodology for calculating this, but it's important to note it. Right now we're 28 in fear. It was last updated, as you can see, today on the 17th of April. So the good thing about it, as I said, is that Bitcoin and crypto in general is holding very well in this otherwise NASDAQ sell-off right now. Price is making higher lows right here, as you can see, but we're still remaining in the fear. So basically there's more upside for the market. And that pretty much concludes the sentiment section. Then we're going to move to the market summary. As far as the summary goes, as I said in the very beginning, we have our risk vest on negative, the setups selective to none. Market right now is in markdown. Well, it technically is still in consolidation, but it's on the verge of breaking down, so I put it on markdown here. The put volume is neutral to slightly elevated. As I said, I have some disagreement with CNN's fear and greed index definition of put call ratio being elevated, but it doesn't really matter. You see what you see. 0.75 put call ratio is right in the middle, right there. Once we get to 1, this is highly bearish and basically pointing to either extreme bearishness or some bearish exhaustion to the downside. Volatility is neutral, as we saw, VIX 22.75, and other things that might impede the market are the rates or accelerated rate hikes, inflation, again acceleration in the inflation, and of course the war. If a NATO member is attacked, that'll be very scary, and of course uncertain for markets, and that's the word markets don't like. So I hope, guys, that was beneficial for your trading. I hope you really like the information that you see here. If you have some recommendations of things that you want for us to put into this market overview, please drop us a comment or give us some ideas in our Discord, and sure, join the Discord. If you like it, there's tons of more information in there. So guys, thanks again. Again, happy Easter for those of you that are celebrating. I'll see you in our Discord server. Till next time, see you. Bye bye.